I think there's a place for banks to make money in this entire corporate cycle. But yeah, I agree that the loan growth may not be high teens as we have seen in the past. The loan growth in the system may be somewhere between 12 and 14%, and that is the new norm. And even for the private sector, that it will be roughly in that range, plus minus 2% more. So that's how. So maybe if you see the private sector banks have got derated maybe for the right reasons.
So in which case, if Sridhar Sivaram is an individual investor, I presume he is not managing third-party money necessarily. He doesn't have to meet the benchmarks. He probably can do even without having banks in the portfolio at all. Does Sridhar Sivaram bet heavily on private sector banks currently, or is his 100 rupees getting split
No,
unevenly?
I think banks are integral part. So if you're not looking at say 3-6 months and you're looking at say 3 years, 5 years, then these banks are giving you very attractive entry valuations right now. So why would you want to stay away from them? I'm not worried the next 3-6 months they have some challenges. Their CD ratios are not the best, and RBI is pushing them to bring the CD ratio down. It can have an impact on their near-term credit growth or earnings, but over a medium term they will come back. No, I like private sector banks. I like PSU banks also.
Yeah, I was going to come to that.
Yes.
But sir, just to round off that point, in private sector banks, if you like them, the large ones, because all of them have come off, so do you bet on the large ones and the relative safety, or are you are doing your own research, of course, but are you going down the ladder in the second round, third round?
I like the large ones.
You like the large ones. Okay. And PSU banks, Sridhar, now kudos on that call, by the way.
Thank
you. Amazing call. But it has run, I'm not saying it's run its course, but it's certainly run the last 3-4 years ahead of the private sector banks. Can they continue to do that?
So I'll just put some numbers to put in perspective that in FY21, the top 7 PSU banks' profits were around 30,000 crores. Last year, they ended at 1,40,000 crores. Profit, I'm talking profit after tax. These banks, their profits grew faster than the stock price, each and every one, including SBI. Their profits grew faster than the stock prices. So effectively what it means is they've got derated over this last 3-year period. Now, how do I see this?
Yeah.
I mean, obviously they have run well. So now we are a bit more selective. So we still find, PSU banks which are, reasonable size, which have 20% plus ROA and trading at one-time book. So I don't see any reason to sell some of these because they're giving me extremely good numbers. Will they get more re-rated from here? Possibly not. But if they grow at, say, if the profit grows at, say, 15 to 18%, roughly I should get that sort of returns from the stock. Obviously, the starting point in November or December of 20 was so absurd for us. I mean, we bought them at 0.3 book. Those are once in lifetime when you get opportunities like this, and you have to be brave to buy them. I mean, easier said than done. I know so many of my fund manager colleagues who said you guys are making a big mistake, and now a lot of them have PSUs in their portfolio. I'm not complaining. All of us make mistakes, okay? But it's just that these banks have come a long way, and when you meet some of these chairmen, you just feel that, wow, they're talking like HDFC Bank used to, in the heydays. They want to give quarter-on-quarter profit growth. They want to have YOY profit growth. So they make contingent provisions to ensure that the profits don't look absurdly high. So I think they've come a long way. We're still bullish on some of them, but not all. That's how